Oh no. What's up, boys? It looks like we made a mistake. Uh, Good morning and welcome to the Crypto Mining Morning Show. I just realized that we have not been live and I was recording and I was just going off on my rants. We were having a grand old time here and we were not live. I do not know how that happened for whatever reason because the chat was going. We typically at the beginning essentially just go ahead and basically talk about all the topics. So we were doing that. It was fantastic. And then I looked over at chat and was like, oh man, that sucks. So at this point, you know, it is what it is. We will get through it today. We are going to be talking about all of the stuff I just talked about pretty much. And then the crypto mining profitability for the day. Topics today, we're going to be talking about, as far as technology goes, the Pcie Gen5 standard for power supplies getting launched. Then we have Blackrock planning to basically offer cryptocurrency as an investment. We'll get into that. One of the things about the whole Blackrock thing, just to make it clear, look, conspiracies and all of that stuff, whether or not I agree with them and what they are in particular, obviously we are walking on eggshells here on YouTube. I have provided a privately hosted chat application in Rocket Chat for you to discuss those types of things. And if you want my opinion, I would feel just fine posting it to something like Library, which is Odyssey. So if you would like that, let me know in the live chat or the comment sections below. Then we're going to be talking about top Ethereum killers, an opinion piece from Coindesk, and I do have opinions on that. But before we get into it, here is a word from today's sponsor. Today's sponsor is BT Miners. Purchasing mining equipment online can be dangerous. With all of the fake storefronts and scams, it can be hard to find a reliable source. That's why when BT Miners reached out for a channel sponsorship, I started by verifying that ordering and delivery went smoothly with a purchase of my own. If you are looking to purchase ASICs hardware from Bitcoin to Dogecoin miners, they are available for purchase on bt-miners.com. BT Miners is a trusted source by both asicminervalue.com and cryptominer.com. Follow the affiliate link in the description and use promo code FREESHIPPING2021 for free shipping on your order. Alrighty, now that we're back, let's go ahead and hop into the first thing for today. We always like to check for new releases from miners. Today we do have one. It's going to be GitHub. For obviously on GitHub for Gminer, and it's going to be version 2.77. This was launched 4 hours ago. They fixed the DNS name resolving over HTTPS. They added an option to ensure unsecure DNS name resolving, and they fixed support for configuration files. Now, what they haven't announced, even though I heard in the background they changed the fee and reduced it, is that essentially in 2.75, which was 20 days ago, they had changed their developer fee to 1% from 0.65%. And there's a lot of people upset about it. Just wanted to point out, though, that like a lot of people were saying they didn't note that or tell the public. They clearly did tell the public. It was 20 days ago. So the fee is higher on Gminer. That was the big note that a lot of people were tweeting about, messaging about, etc. So that aside, let's go ahead and get into new hardware. I'm excited about this one. Video cards, and basically from videocards.com, we have full spec PCI Gen 5 12 plus 4 pin MSI power supplies for next-gen GPUs have been pictured. Folks over at WCCF Tech have exclusive photos of the next-gen power supplies designed by MSI. Asus Loki will not be the only power supply equipped with full-spec PCI Gen 5 connector. MSI is also working on the next-gen supplies equipped with the full 12 plus 4-pin connector for upcoming GPUs. Just recently, we covered a topic of Asus Thor PCUs, which are yet to come out this month. Thor PSUs will not offer a full 12 plus 4-pin PCI Gen 5 spec connector for GPUs, but instead a 12-pin cable borrowed from NVIDIA MicroFit design that can only support up to 500 watts of power. The Loki series, on the other hand, will be fully compatible with 600 watt specs, which requires 4 additional pins. The PCI SIG specs define a new standard called 12VHPWR, which defines a 12-pin power cable with an additional 4 signal paths responsible for negotiating power requirements and ensuring that the graphics card was properly connected to the supply. We have thus far neither seen any photos of the connector nor the full spec cable. However, thanks to WCCF Tech, that is no longer the case. So as you can see here, there's some pictures of the MSI Meg, and you have the single PCI 5.0, and then you have 4 traditional PCI powers here within here. They can either do, CPU or PCIe. So really, this design's a little concerning for a few reasons. One is that if you are doing traditional graphics card power, you could I guess technically you could get 4 on here. 2 of these, like if you're doing a high-end motherboard, 2 of these are going to get taken up by the CPU. For mining, clearly, like this is going to be a problem too. Like one of these would really only give you up to 1, 2, 3, 4 times 2. So 6 to 8 pin PCIe powers, and then you'd have your single PCIe 5.0. Definitely wouldn't be great for mining, but we'll also talk a little bit more about this and why some of these later gen GPUs are not looking great for big mining rigs anyways. But these Meg and MPG power supplies will be offered with either a 12-pin to dual 8-pin adapter cable or a full-spec 12 plus 4-pin cable with 4 signal lanes attached to the power supply directly. The difference here should be that the adapter cable will be limited to 300 watts, which is 2 by 150, whereas 12 plus 4 will be up to 600 watts. In any case, those power supplies will support practically any GPU configuration, given that the user can still attach another 2 8-pin cables. Once again, like I guess it could be, it's really 4 8-pin cables, but also my question is if you utilize this PCI, what kind of demands does that put on the power supply, which is 600 watts? And we'll kind of talk about that too, because it's a little crazy here, because MSI is preparing at least 5 PCI Gen 5 compatible power supplies offering up to 1300 watts of power for Meg series and up to 1000 watts for MPG. But if you have a single PCIe 5 rail coming off that can go up to 600 watts and you get a 750 watt power supply, you are going to be cutting that thing so close as soon as you try to add on if you had like a top end GPU, that it's going to be crazy. But even at 1000 watts, it seems like it's going to be crazy, right? So what is this kind of telling us about the next gen of GPUs? It's telling us that the top end from NVIDIA could take up to 600 watts. More than likely though, because Asus is a third-party manufacturer, and they only go up to the 500 watts, I would assume the TDP of like a 4090 will be about 500 watts or below, right? 450, 500 watts, somewhere around there. It's going to be very difficult to build mining rigs for these things too, because if you do use splitters, you're not going to have like the full negotiation that needs to be done through that 4-pin, which is the 4 signal lanes. And there could be potential power issues with basically using splitters from the traditional by 8 pins, which is what my concern would be as a whole. In addition to that, I think that like you're going to have, a huge increase in power consumption on all of these GPUs just from that 12-pin. And if you want to utilize traditional power, or like the power supply, not traditional power. If you want to use the new standard, it's going to be hard pressed to find power supplies that have multiple outputs of the new standard because of the specifications of it taking up to 600 watts. You don't want two on there, you know, that'll take up to 1200 watts on a 1300 watt power supply. This is just going to be insane. Also, at what point do we just get to, you know, desktop PCs requiring 220 power, right? Like if you're in the States at 120 and you can get up to like 1600 watts, which is okay, but you're also pushing that panel pretty dang hard. You know, it's nuts. What else does this tell us? This also tells us that it's probably less likely that even the top end of the NVIDIA GPUs on as far as 4000 series will have SLI. There was no, you know, even at the top end here, the 1300 watts just coming with a single Gen 5 connector. It doesn't look like that it might, well, it looks like essentially they may be doing away with SLI all the way as a whole, even at the top end. We know for the RTX 3000 series, they had already removed SLI on everything below the 3090, which was a pretty huge disappointment. You would expect the 3080 at least to support it, or the 3080 Ti. We knew the 70 series had been cut out from the 2000 series. But as far as that goes, the 70 series probably this time around would have been a pretty good bang for your buck early on, as far as from the processing power for traditional gaming, etc., traditional applications on the desktop PC, if SLI was allowed on the 3070 or even the 3080, right? So that's kind of where we're at. Lots of kind of assumptions we can make surrounding, of course, the new launch of GPUs according to this. Will AMD use the new standard? I haven't seen any confirmations on that. So if you guys have, definitely let me know. I'd be curious as far as that goes. Let me see if I can get this to, oh, I see why. Okay. There we go. All right. So now, of course, let's go ahead and talk about the Blackrock situation going on here. So I have a few things to discuss surrounding it. A couple of things that we're going to stay away from. You know, I'm going to acknowledge, first of all, okay, that Blackrock, obviously, just due to the sheer size, etc., can be a scary topic for a lot of people. We're specifically curious about cryptocurrency in general. That being said, a lot of people feel like there's the whole "you will own nothing and be happy," you know, motto kind of surrounding Blackrock. Who will own everything? Blackrock, right? And part of that, of course, will be cryptocurrency. And what's interesting is the way they're doing it. And let's get into this. So Blackrock, the world's largest asset manager, is preparing to offer a cryptocurrency trading service to its investors' clients, according to three people with knowledge of the plans. The New York-based company, which manages over $10 trillion in assets for institutions, plans to enter the cryptocurrency space with, quote, client support trading, and then with their own credit facility. One of the people said, in other words, clients would be able to borrow from Blackrock by pledging crypto assets as collateral. One of the people said Blackrock will allow its clients, which include public pension schemes, endowments, and sovereign wealth funds, to trade cryptocurrency through Aladdin, which is short for Asset Liability Debt and Derivative Investment Network, the asset manager's integration investment management platform. The timetable for unveiling the service is unclear. Blackrock declined to comment. The asset manager may have been telegraphing its intentions as early as June, when it began hiring for an Aladdin blockchain strategy lead. These days, it's taken as known that Wall Street banks and large financial institutions are edging into crypto, with the likes of Goldman Sachs, Morgan Stanley, and Citi carefully choosing strategies. BlackRock has already sent some positive signals to the market regarding crypto, including trading CME Bitcoin futures as a as per a filing with the U.S. Securities Exchange Commission. The company also has plans to launch iShares blockchain and tech ETF, an exchange-traded fund tracking an index composed of companies involved in crypto technologies in the U.S. and abroad. So one of the big things that they're doing as well, obviously, that we should be worried about is the loan thing. But here we go. So BlackRock also actually owns, according to this article, 16.3% of MicroStrategy, whose CEO, Michael Saylor, regularly trumpets news about his firm's Bitcoin holdings. And I actually didn't know that until I read this article. So one of the things that's a little surprising and a little concerning, obviously, here is that they own a little bit of everything. Like, you might say like 16% isn't that much, but that's quite a bit. That's also quite a bit of Bitcoin just kind of through a shielded investment into MicroStrategy, who is one of the top Bitcoin investors currently around as far as like institutional investments go. So that's pretty wild. But a second person with knowledge of the plans said BlackRock was looking to get hands-on with outright crypto and was looking at providers in the space. A third person referred to a working group of approximately 20 or so inside BlackRock that is evaluating crypto, adding they see all the flow that everyone else is getting and want to start making some money from this. All right, so let's go ahead and just talk about this from the perspective of current holders of Bitcoin and what's going on here. Obviously, when we talk about institutional investing, everybody gets a little bit concerned. But I need to remind you of something, especially as it pertains to Bitcoin and the principles of Bitcoin. And one of the things that you need to pay attention to and consider is the fact that Bitcoin has a supply cap. So there is this theory from like the old heads, I guess, within cryptocurrency that Bitcoin itself is a Trojan horse. And while it is an asset that at the end of the day will completely flip on its head, in theory, the traditional markets, right, and allow the retail investors, the everyday middle class, lower class investors to actually compete at a better level without the devaluing of their currency based on the printing of money by governments and banks. If essentially institutional investors get in, all they really do is increase the value of the cryptocurrency that those retail investors have. Therefore, the Trojan horse theory that basically because Bitcoin is so attractive as an asset that institutional investors will get in, they're basically getting in at their own demise. That is kind of the thought behind it. So when we talk about BlackRock being scary, etc., well, don't worry about it. As far as I understand from the white papers and from the theories and so on, it's kind of expected and also part of the transition into, I guess, the new world currency or whatever you want to call it. But that could be scary to a lot of people too, just depending on the terminology and me using the words new world right there. But I was referring to the Amazon game. Anyways, let's go ahead and talk about the portion that could be a little sketchy here. Make sure you guys have the better options to do, which is essentially the idea that they would loan you some sort of fiat currency in return for your cryptocurrency. That can already be done in a decentralized manner. So you don't need institutions like BlackRock or anybody else or banking systems traditionally to do this. There are plenty of different platforms where you can put up your cryptocurrency as collateral and get a portion of stablecoin that you can then go ahead and cash out for whatever you need to do. Do I recommend doing that? No, but I would recommend doing that over, of course, doing it through a third party. So that's what I wanted to clear up as far as that's concerned. So is BlackRock investing and looking into cryptocurrency, specifically Bitcoin, because it's different than a lot of other cryptocurrencies, just to be clear, a good thing or a bad thing? I think it's part of the plan. I think it's part of a good thing in the long run. The problem that we have, of course, would be total accumulation and the public never having access to this asset class, which could be a potential problem. But as long as you're a part of this right now, I think everything only looks to be positive, because as they dive into these investments, they're only increasing the value of your investment that you made before they were in. So I think it's a good thing overall. Now, the big topic for today was going to be this opinion piece, which is, of course, the top Ethereum killers. And this is by Coindesk. And like I said, an opinion piece. I'm going to have my own opinions about it. What we need to do, though, is kind of set the playing field here. And that's because you need to understand that Ethereum is different than Bitcoin at its heart. While there are, of course, projects being built within Bitcoin that could add it into, of course, the Ethereum sphere, it's not really quite at the level, and it's not really the point of Bitcoin. Bitcoin is more of a, I guess, a currency. A lot of people will say a store of value and so on. In the case of Ethereum, from the get-go, it was about smart contracts. What I will use for that term is going to be programmable blockchain. Now, for the most part, within programmable blockchains, especially within the top 100 or the top 20, which is what's going to be discussed here in this article, all you have are alternate types of consensus mechanisms. Essentially, you have different consensus mechanisms that validate transactions on the blockchain. In the case of Ethereum, what we have is proof of work. Now, of course, Ethereum is talking of moving off of proof of work. It actually looks like it's in the works and moving towards proof of stake. While everything else on this list is already on proof of stake, or something else that they kind of name it something else, but it's essentially still proof of stake, right? You have proof of history, I believe, for one of these. We'll get into that in some other video. The point being, though, of course, right now as it sits, Ethereum within the top 20 is the only proof of work programmable blockchain. And I think as an asset, that sets itself apart from these competitors. Does it mean that the struggles that some of these competitors have are directly related to their consensus mechanism? I don't have any proof of that. All I can say is it does seem like it's more likely to have more issues outside of proof of work. Let's go ahead and get into this article, though. So new crypto investors likely noticed the drastic price drops and bearish sentiment detectable throughout the crypto market, with Bitcoin at a 6-month low and all coins not far behind. Now, we've had a pretty good pump here. Bitcoin at 45,480 and Ethereum even on their own website, 3,224. That makes this introduction a little weird, but let's move on. Yet crypto industry insiders remain optimistic, at least from a long-term perspective, and embrace this moment as somewhat of a race to see which blockchain projects survive and become leaders in a decentralized future. This article originally appeared on Crypto for Advisors. Maybe that's why this intro is like that. But among the most epic rivalries in the wild crypto west are those between Ethereum, the original smart contract blockchain, and projects created to improve upon Ethereum's technology. So one of the big notes about this too that needs to get discussed is the difference between basically a layer 1 solution and a layer 2 solution. I believe someone was talking about Matic in the chat way early on before we messed up and didn't stream. But one of the things I got to point out there is that's a layer 2 solution that's still built on top of Ethereum. These are going to be layer 1 solutions. They would, in theory, could have their own layer 2 solutions. Not that they're really needed, because the consensus mechanism allows for them to basically keep fees low, etc. So Ethereum's native currency, Ether, had a market cap of roughly $370.5 billion at the time of writing this, and it sits at number 2 on the Coindesk 20, just below Bitcoin. The Ethereum network is scheduling planned upgrades in 2022, and some say the new version, Ethereum 2.0, will offer improved processing times, lower fees, and more scalability. Until then, so-called Ethereum killers are building up momentum and occupying a growing share of the non-fungible token NFT market. Although Ethereum still maintains about 80% of the NFT transactions, also I think as a side note there, I think 80% of those transactions are on OpenSea. So one of the things that people need to pay attention to is like, we are in that weird correlation to the internet bubble where first movers do have a significant advantage for the time being. Does that mean that they will always be king of the hill? No, it just means like if you're a first mover, you have a significant advantage. And the first movers in this whole NFT space is clearly Ethereum. And then on top of that, OpenSea. So while OpenSea has its issues, it does mean a lot that they're a first mover. And because of that, you should pay attention to essentially what your pricing would be for an NFT and your potential for resale on OpenSea, where basically like 80% of the population is participating in NFTs, compared to what your potential of resale of an NFT is outside of OpenSea. And while that's not financial advice, it's just clear, like, obviously, if you want to go sell something, your best bet is to sell it on Amazon, not on, whatever other third-party website that's in existence. Does that mean the other third-party site's terrible? No, it just means that you're going to have a better chance of selling it for a higher price on a platform where more people are located. That's just the way it goes. The year 2022 will be the battle for Web3 and the next evolution of the internet, says Ian Bellina, founder of the crypto analytics firm Token Metrics. Look for a heated race. One of the things interesting about this that we're going to go into too is none of these really solve Web 3.0, at least Web 3.0's base issue, which is going to be infrastructure. But let's get into these real quick. The first one's going to be Solana. Currently at number 5 on the Coindesk 20, Solana's native currency Sol had a market cap of 62.3 billion at the time of this writing. Solana uses proof of history, which I'm going to do some more research on for you guys, to validate transactions, as opposed to Ethereum's proof of work consensus model. Large institutions such as JP Morgan and Bank of America have expressed their confidence in Solana, even saying it could become the Visa of digital asset ecosystem. Well, one of the things that Solana has a problem with that isn't even mentioned here that we should mention is, of course, a lot of the hacks that are going on within it. Now, the last one, which was the big one, just to be clear, was due to the actual bridge being a problem, not necessarily Solana. But Solana has also had a ton of downtime. And that's what happens when you have a centralized currency. Let's talk about why it's centralized here. They actually bring it up, so it's pretty easy. Solana is also backed by top venture capital firm Andreessen Horowitz, which isn't always considered a good thing in the world of Web3. No, it's actually always considered a bad thing. If you talk to a majority of people that are actually interested in the principles of crypto, which move into the principles of Web3, then you don't want venture capitalists controlling a single entity where transactions are being performed within this Web3 ecosystem. So no, it isn't always considered a good thing or whatever. It's just always considered a bad thing. All right, Coindesk, that's how I see it if we're looking at this from the fundamentals of cryptocurrency and what the fundamentals of Web3 should be as interpreted from the fundamentals of cryptocurrency in the first place. Too much institutional interest could raise the eyebrows of decentralization diehards. Meanwhile, Ethereum has a loyal user base that many suspect won't abandon it. And that's the first mover advantage with Ethereum. I think that people will abandon Ethereum if there is a cheaper, easier solution to trade. And it kind of, one of the notes that we should bring up here is that not only is there a first mover thing, but there's also a convenience thing. The reason why so many people are utilizing still to this day OpenSea over any other platform is convenience and familiarity. The actual price, as long as you're able to sell whatever NFT you bought for more, the actual price of the transactions and stuff aren't actually being interpreted into people leaving the platform. It's actually because of that familiarity and convenience. That's where the first mover advantage comes into. It's why my parents still have AOL installed on their PCs, even though a majority of the world never uses it anymore. And the older the population gets, or the older the portion of the population gets, the more the first movers stick around. That doesn't mean they're going to stick around forever and other winners won't come. It's just kind of the way it happens, right? So let's talk about Cardano. And okay, so actually we have one more here. Nonetheless, Solana transacts at lightning speeds and fees equate to a fraction of a cent per transaction. Since launching in 2020, it has experienced strong adoption and settled more than 50 billion transactions. Perhaps the most appropriate way to view Solana is as a potentially more mainstream Ethereum. Here's the thing that you need to take into account for their transaction speeds, which is always flawed on all 5 of these. What is the most used blockchain currently out? It's Ethereum. We even looked at this yesterday when we were looking at the speed of transactions and the CBDC from, of course, the Boston Fed. One of the things that we looked at was they said they could do 1.7 million transactions in a second. Who has already done 1.7 million transactions in a second? Ethereum. Who else has done that amount? Nobody. Not even close. Not even Bitcoin. Okay? So to basically say that this small, like, look, the total market cap is for Solana, which is the next largest, is 62.3 billion. The total market cap of Ethereum is 370 billion, which with just astronomically higher transaction numbers, it's comparing apples and oranges. It's like this. It's like saying the Corvette that's stuck in traffic on I-35 in Austin, Texas is slower than the Ford Escort that's driving down the toll road, whatever that one is, I-30 or whatever. Well, yes, that is going faster, but given the same circumstances, if you move that Corvette over to the toll road, that Corvette's going to go much faster than the Ford Escort. It doesn't make sense. It's a moot point. It's a bad argument. Okay. Cardano is a contender for a more environmentally sustainable alternative to Ethereum. Its native currency, ADA. All right. We got to nitpick this one too. Every single time we get into discussions of programmable blockchain and competitors to Ethereum, we get environmentally sustainable alternatives. Okay. This is a false narrative for multiple reasons. But first of all, let's just talk about, of course, where are proof of stake coins hosted? They are hosted typically within virtual private servers that are large data centers run by Google, Amazon, etc. Typically, obviously, utilizing tons of power to supply all of the processing that needs to be done. On the other hand, what you have for proof of work is traditionally a little less so now, but traditionally you have a more decentralized network where the incentive is to lower the cost of your power. An investor in a proof of stake coin has no incentive or really any ability to reduce their power costs. Therefore, they will never look into that or actually try to achieve that. And because large entities that are running their nodes for them are so successful, they typically aren't looking at reducing their power costs with sustainable energy either, at least for the most part, to the extent that, say, like a Bitcoin mining farm would be looking to do it, because that's your 2 main metrics. Now, of course, in the case of Amazon, we have talked about their data centers not being cooled. Part of that being, of course, that they find that reducing the power cost from that perspective by reducing AC and increasing CFM is better for them. But that also works and plays within, of course, cryptocurrency as well. So the next point that I want to bring up, of course, is the level of economic success based on power. You can basically base the level of economic success of a country or a society or a group of people or even an individual based on their power consumption. Does that mean that we should not look into, of course, more renewable energy or anything like that? No, but your personal place within society and even that society's place within the world is directly related to the amount of power they are able to consume. Hopefully some sort of clean energy, hopefully maybe even some atomic energy or whatever that may be to supply all of that power that does less damage to the environment, etc. But that is the goal. Now, if that is one of the number one goals and one of the easiest ways for you to determine economic success, then you are also incentivized to essentially decrease the cost of that power. And the number one way to decrease the cost of that power is by moving to sustainable energy. So I would argue that proof of work mining actually stimulates the move towards renewable energies and more environmentally friendly power options over proof of stake, because proof of stake doesn't incentivize individuals to actually focus on this metric. It's a false narrative, is all I'm saying. Its native currency, ADA, had about 39.52 billion market cap at the time of this writing. Crypto insiders are keeping an eye on Cardano, which has performed modestly because of the recent release of Cardano's first decentralized finance exchange, SundaySwap. Now, one of the crazy things about Cardano, and that is a recent release that like increased, of course, I suppose, its price, is that its oracle, Ergo, had already done one and is ready to integrate Cardano as well. And it's a much newer coin in its proof of work. So I feel like it's kind of funny that Ergo's moving definitely moving faster than Cardano at this point. Time will tell whether Cardano can unseat Ethereum or if similar learning curves will occur as more users transact on the Cardano blockchain. Once again, the big issue that you see there with these competitors is everybody wants to talk about how fast they are for their transactions, but they aren't even near the volume of what Ethereum has. So it's kind of a silly point, but at least they kind of acknowledge that there. Now, this one's a big one that a lot of people have been asking me to look into. I have not had a chance to really look into it in depth. One of the things is I get a little frustrated, just to be like honest and upfront with you all, when I ask about proof of work stuff and then people are like, check out Tezos, check out Tezos. And I'm like, it's not proof of work. What are you talking about? It's like the same thing if I'm like talking about layer one solutions and people are like, talk about Matic. And I'm like, no, that's not what we're talking about today. So it doesn't mean that I'm not aware of Tezos and what it does. It just doesn't pertain to a majority of the conversations that we participate within this channel. Okay. So that being said, let's get a brief overview why they say it's kind of top competitor. Coming fast on the scene is Tezos, another smart contract capable blockchain used to issue new digital assets and create decentralized applications, or dApps. XTZ is the native cryptocurrency of Tezos. The currency had a market cap of 3.6 billion. That's so low at the time of this writing. Several notable projects have launched on Tezos, including those in the fashion, music, gaming, and art industries. Tezos was one of the first networks to use a proof of stake consensus mechanism. It also has unique governance features built in. Participants who stake at least 8,000 tokens on the network receive voting rights, which allow them to have a say in governance. Now, that is one thing that is actually, in my opinion, super good. And I think that at least if it's proof of stake, allowing the stakers to have a say through like in governance does put it, head and shoulders above the rest, where you either have a VC funding, right? In the case of the case of Solana, or you have some overarching developers that basically control the direction of the network based on their own votes without asking the rest of the participants within the network, i.e. Ethereum, right? So at least that seems a little bit better. As far as my opinions on Tezos taking over like Ethereum, it has a long ways to go. $3.6 billion compared to 370 billion. It's just nowhere close, guys. Nowhere close. Polkadot. Now, Polkadot I was into for quite some time. I thought that there was a lot going on there. I think now that we have other options, especially with different consensus mechanisms, that there are better things to move towards here, because what Polkadot is focused on is primarily going to be interoperability. There we go. I have a hard time saying it, but that's what they focus on, as they'll talk about here. And it kind of sets itself a little bit apart from your traditional smart contract blockchains like Ethereum and so on, because it's integrating with all of them. And I think this is important. It is kind of something Cardano is doing as well, but not to this extent. But Polkadot, DOT is the native cryptocurrency of the Polkadot platform. It had a market cap of 25.72 billion at the time of this writing, which is still nowhere close to Ethereum. Polkadot is known for a feature called interoperability. Its infrastructure connects several blockchains together into a single network, enabling them to exchange data without compromising their security. Interoperability is therefore essential for the future of Web3, in which services, products, and currency will move throughout what many hope will be a decentralized digital ecosystem. Robust interoperability also creates the possibility for cross-chain collaboration, potentially leading to more collaboration among protocols. Now, there's a better option technically for interoperability that is also proof of work as far as a consensus mechanism, and that's known as Flux. Now, what DOT has, as opposed to Flux, which I will fully point out, and I've already talked to Flux about this, I think even in the interview, is that Polkadot has incredible wiki and is very developer friendly. It also utilizes Rust, which some people are against because the standard's been Solidity across the board. But I think Rust is, from my understanding from the developers I've talked to, is very powerful, super good as a language, and offers more than Solidity in some cases. But you kind of have to have the support for that and the developers that are actually working within Rust, which I hear also it's more complicated than Solidity, so therefore there's probably less developers working within it. That being said, back to the original point, as far as Web3 goes, I think that Flux is a better option, especially because the biggest problem with Web3 right now that needs to be solved is infrastructure. And until you can figure out how to truly decentralize the infrastructure, it's not going to be Web3. One of the big problems there, of course, even that Flux is experiencing, is that a lot of their nodes that provide this decentralized infrastructure for building virtual private servers, etc., within the blockchain and within Web3 are still run on traditional virtual private servers that are run by the big three. And that's going to be an issue. While that's not the entire case and technically still better than being run under just Amazon itself, it still presents a problem of decentralization and what that needs to work out to at the end of the day. And when I say it's better to have some of all three, basically think of it like this. If you have a node in Google, a node in Amazon, and then a node in Azure, essentially AWS, Microsoft is Azure, Amazon, AWS, Google. Anyways, if you have any sort of, if the load balancers are working and you have any sort of failure and that particular data center for Amazon or whatever is down, technically the blockchain will be more robust from a failover standpoint and move over. That being said, I actually did experience a complete wipe of my Minecraft server on Flux when it reset. They are aware of the problem. Obviously, it's early days. I expect stuff like this. But, you know, the kids weren't very happy when the whole server got wiped and I didn't have any backups locally. Now I'm backing it up. But obviously, there's a long way to go for Web3 infrastructure. a long way to go. Let's look at their bottom line here. They say, bottom line, among smart contract blockchains, Ethereum still occupies the hearts of Web3 veterans and poses a strong possibility for widespread adoption. However, investors and advisors alike should stay informed about newer smart contract blockchains that present innovative solutions to Ethereum's shortcomings. As the demand for new dApps and DeFi protocols increase, everyone will be looking for the right infrastructure to use to build the future of Web3. So there we go. All right. Let's get into mining profitability. And I had a rig down. We did get it back up. It's looking great. Our estimated earnings are up to 0.08. We're back in the money. Woo! And the price of Ethereum has also put us up to $270 a day for today. Everything's feeling pretty good as far as the mining farm goes. One of the things that we talked about yesterday is the expander die that Fox Protocol Mining talked about. And I agree with him on that. And one of the things that I'm doing, obviously, is trying to move into ASICs. I'm stuck on power. So today I'm supposed to have a call for upgrading power. We got to go to 3-phase because part of the problem is, just to give you guys an idea, a whole bunch of other miners moved in around me. And so now we're using too much power. So there's a plan in the works. I don't know temporarily if I can get another panel or an access to another panel to continue to expand. I'm at kind of a weird point right now. I'll keep you guys up to date, but I think like we have one ASIC coming in that I think is going to just cap us out. Just the Ethereum mining rigs, not the ASICs included right now that are at the farm, are doing like 20 kilowatts, right? And we have a 200 amp panel that we were going to upgrade, but then all this other stuff started coming into play. Anyways, that's where I'm at with my farm as an update. Let's take a look at, of course, the 3090 per usual. Take the 580 off for now. Ethereum is at 541 a day after power on the RTX 3090. Ethereum Classic is at $2.67 a day after power. Pretty cool to see Ethereum Classic here. The Zell hash rate is wrong. Make sure you use mini-Z. You'll get 110 solutions a second on the 3090. That does put Flux in second at 337 a day after power. Then you have your Kryptonite GPU coins. If you can go sell these on TradeOgre, you know, 1 or 2 people mining them isn't going to be a big deal. I don't think either one of these is going to handle too much hash rate, right? At least nowhere close to like Ethereum Classic or even Flux. So be careful when mining those. Especially because like Ryo hasn't been developed in a couple of years. Conflux, 226 a day. Ergo, 247 a day. So there you go. Let's take a look at the 2080 Ti, which usually is more profitable on, or historically has been more profitable on Flux. I'm assuming with the bump today in Ethereum, we're not seeing that. Right, I did assume correctly. Ethereum 256 a day after power, Flux at 224 a day after power. You have your Kryptonite GPUs that we discussed earlier. Cortex $1.76, Conflux $1.37. Raven coins all the way down here under Eternity, surprisingly enough, which I haven't heard about in quite some time, at $1.32. Eternity on a pump or something. Interesting. I think one of the things that we are looking at is Ethereum Classic becoming a viable option for Polaris GPUs. Let's take a look. Ethereum's at $1.34 a day, and Ethereum Classic does come in second at 61 cents a day. While that's still like a, over a 50% reduction in profitability, seeing Ethereum Classic beat out Firo definitely is kind of a little bit of a sign of hope for the Polaris GPUs. Does that mean you should be purchasing these right now? No, but if you have them, you do have a little bit of light at the end of the tunnel for Ethereum Classic. Let's take a look at, of course, the difficulty and hash rates on the networks. Bitcoin has been steadily rising over the past 7 days. It's up to 208 exahash a second, and the difficulty continues to climb. Last climb, I guess, back in January, but 26.69. Let's look at Ethereum. All right. Still over 1 petahash a second. Difficulty still remaining the same. No changes from yesterday. Let's take a look at Flux. No changes, but still overall down from that regular 2.5 mega solutions a second. It's down to 2.13 mega solutions a second. Looks like there is a difficulty decrease in response, down to 24.66 from like 35. So I think that does kind of show why maybe it's a little bit more profitable today than it typically has been in the past. Let's look at Ergo. Ergo had, it looks like it went from 14 terahash to 15 terahash between yesterday and today, which is kind of cool, but the difficulty is still going down. I guess a little pump up today at 1.75 from the 1.63. Now, I wanted to address something with Ergo because we released a clip last night, and then in addition to that, what we had said, and I think I need to correct the language here. I had said, I assume, of course, that the re-emissions has to do with profitability post emissions running out. I don't think I need to say assume here, because the fact of the matter is that it is a fact that emissions was going to run out too early. It is a fact that miners probably wouldn't be profitable. I say probably. Okay. It is a fact that miners wouldn't be enough profitable without a base block reward after 6 years, because there's not enough people on the network to support it. That's true. So from my perspective, EIP 27 has to actually be implemented for the network to survive past the 6 years. More than likely. That's what I see it as. Now, let's talk about the pool. All right. First of all, I am never sponsored by coins or pools. Okay. So let's get that out of the way. If I sound like I'm shilling a pool or a coin, it's because I genuinely have looked at it and I think that it is doing something different and needed for, of course, the ecosystem. In the case of GetBlock, the reason I am giving them props is because what they have implemented is the first time anything like this has been implemented within the cryptocurrency space, which is a mining pool giving the say of governance to the individual miners. It is very rudimentary. It is very basic and is straight across democratic. It doesn't have a lot of intricacies that could be implemented to make it better, but it is the first time, making it significant in the cryptocurrency space. So they deserve credit there, regardless of whatever you guys think as far as shills and so on goes. But yes, I will shill a project from your perspective if they are doing something groundbreaking within cryptocurrency. And that does not mean that my opinion is invalidated there, okay? It just means that something good happened, all right? And it doesn't mean that you may not think it's a good thing and we can have a discussion of it. But don't pull that crap in the comments section. And if you want to go make a video about it, go make a video about it, okay? I put a lot of work in here. It is what it is. You can either follow along or you can stop watching. I appreciate each and every single one of you. If I make a mistake, that's a different thing. But just going in and calling people shills is ridiculous at this point. Let's talk about profitability on Ethereum for mining pools. Last 90 days, Flex Pool in first, Mining Pool Hub in second, Crazy Pool in third. Last 60 days, Flex Pool in first, Crazy Pool in second, Mining Pool Hub in third. Last 30 days, Flex Pool in first, Crazy Pool in second, Ethermine in third. Last 21 days, Crazy Pool in first, Flex Pool in second, Mining Pool Hub in third. Last 14 days, Flex Pool in first, Mining Pool Hub in second, Ethermine in third. Last 7 days, ZET in first, Flex Pool in second, Mining Pool Hub in third. Last 3 days, ZET in first, Ethermine in second, Flex Pool in third. For the last day, ZET in first, 2 miners in second, and Ethermine in third. So there you go as far as that is considered. And ASIC miner profitability, KD6 almost breaking that $200 mark. It is really coming into good profits lately. KD5 at $135 a day. Antminer L7, $63 a day on NiceHash. You could do a combination of Doge with Litecoin. I'm not sure what NiceHash, how they're renting that out. Should be interesting. Then we have of course, the KD2, those are all staying up top. Let's look at the S19 Pros. They're, coming back in and of their own. 1628, on Bitcoin alone. 1954. I think the best was around 40 for a while. Pricing on those is still pretty rough. I do have the C98 coming in, which is 98 terahash, or the C16, sorry, coming in, which is 92 terahash or 98 terahash for 8200. So I'll let you guys know once that review comes in. Now that miner is being traded for, of course, the sponsorship videos that they sponsored for the channel. So full disclaimer on that, as always. Let's go ahead and get into questions and answers. I really only have like 5 minutes for this, and then I got to go to jiu-jitsu. All right. Whew. Okie doke. So, questions and answers. Of course, we probably missed a lot because we weren't live, making those rookie errors. But if you want to ask a question, just tag @SonOfATech, or of course you can donate. Detroit Iris says, @SonOfATech, say the 4090 is 600 watts. For easy math, that means it needs to hash over 240 megahash a second on Ethereum to be viable to replace 4 3070s and cost less than they are advertising 3090 Ti's for. Yeah, well, we already know the 3090 Ti is probably not going to be that good as far as for mining Ethereum in particular, because the increase in total bandwidth is only like 10% over the 3090. We don't have enough specs on the 4090, but I would lean towards most of that power consumption coming from the cores. I don't know if they're going to do a chiplet design like AMD and Intel are planning on. I would assume they would need to. Otherwise, I think AMD might kind of blow past them really quickly. It should be interesting to see. I think from a mining perspective, it'll be fun. So what we're talking about is new technology and figuring out, how to make these mining rigs work with something that's potentially taking 600 watts. Yeah, we could have like a 6 GPU rig, but how many power supplies are we going to have? 3, 4, 5, 6 per rig? What happens here, It's going to be fun though from a, I guess a engineering architectural kind of perspective for miners. ERT Ted says, I am a coal miner, and and they have blanked their coal miners. Be prepared for the same on crypto. Okay. Tony Topanga says, if I send a super chat now, will Son of a Tech be able to address it at the end of the show? Well, yes, I would have been. All right. Look for stuff by me, and I don't know about that. That's not really a question. Sam Hurley says, ask Son of a Tech, for the viewers who don't know, what would a node build look like? Example being all 3 flux options. So you would either have at the very base, and it's not quite out yet, you would have essentially a Raspberry Pi at the very low level. That's great, but that's not going to provide enough processing power for a truly decentralized infrastructure. So once you get up there, if you're really looking at a build out, you're looking at traditional virtualized server infrastructure, bare metal. You're looking at buying, in my case, what I'll be running is 2 DL380s, 2 DL580s and 2 Dell 720XDs. That's what I already have. It's older hardware, but it's going to be fine for running nodes. It's still going to have more processing power than a Raspberry Pi, for example. So you can run bigger nodes off of it, that sort of thing. Your other option, right, is you're running on a virtual private server. You could use something like DigitalOcean or Vultr That's where like a majority of nodes end up going. Or you could utilize AWS, which is Amazon, Google, or so on. But a build out for like in-house is going to require essentially IT infrastructure knowledge. Once I get a dedicated line for internet, we'll be covering like what mine looks like, my rack setup, redundant power, PDUs, of course, battery backups, and all of that, switching, so on. But you have to go to that extent with redundancy, and preferably either a backup internet. Usually like a lot of providers at the business level will offer something like a wireless backup at the very least. But typically, like if you want real good redundancy, you're going to have two different service providers come in. So you'll have like an AT&T line and a Time Warner line or whatever it may be. Savas Nikas, thanks for the 10 euros. You rock, my man. Son of a Tech, based on NVIDIA alone in 10 series, 20 series, and 30 series cards only, which are the most efficient? 30 series is the most efficient right now. But that being said, it also depends on the coin you were talking about, because on Flux, the 20 series is more efficient. Ace Dog says, how do you feel about decentralized storage? I know of a large insurance company that is investing in it. I mean, obviously storage is going to be a big deal. Big data is always a big deal, right? So getting decentralized storage is going to be something that needs to get figured out. Do I think we're anywhere close? No, I don't think that we are. One of my gripes with like Pcie, for example, is they're not really, they don't solve the decentralized storage. In my opinion, they kind of waste storage because they're just using it to solve blocks. And I think storage is a greater need than processing power, if that makes sense. Because you can consolidate processing power, and it traditionally gets better over time, like exponentially better. The storage doesn't really get exponentially better on capacity over time, right? Like if we're talking about like storage pricing, you're still looking at quite a lot. And then the largest drives are still only like 16 terabytes for the most part, like consumer drives. So I think storage needs to be conserved more than processing power, if that makes sense. Total Bouillon says, I'd love to know your thoughts on Goldfinch in a future video. I don't know. Is that a miner? I don't know what that is. Arcade Cup says, is there a max length on USB extenders? Have you had issues with them? Should they be high quality 3.0? You definitely want like the latest revision. The longest ones I have are 6 foot. And they seem to be fine, even in a mining situation. And they're USB 3.0. Scott Schultz said, okay, no question today. Cool, dude. Well, so Blacksmith, I can see it, but I'm not going to prove it because of the curse word. But Pcie didn't. No, Pcie didn't ever have, they were never focused on decentralized storage. They were processing transactions. Like, Pcie is a waste of storage. That's why I was saying, like, if you compare, like, the need for storage versus the need for processing power, like, using processing power to hash out an algorithm and basically brute force, while like not being utilized for something that benefits to traditional societies, maybe whatever we're talking about, AI, etc. Storage is typically needed a lot more. And all that Pcie does with storage is waste a whole bunch of storage to process transactions. But it's not even processing the transactions technically, because all it's really doing is just looking at a set of lotto numbers printed on any given drive to see if you win. It's kind of weird. But you can't rent the storage out. That would be more like, what is it again, guys? Maybe you can help me. File, whatever. Crypto. Why can't I remember the name of it? Filecoin. I think it's Filecoin where you actually have decentralized file sharing. Ace Dog says, any tips on buying ASICs? Yeah, use my affiliate link at BT Miners. But, you know, it's weird. Everybody's asking a lot for them right now. Anyways, guys, I got to go to jiu-jitsu. I'm already going to be late, which means I got to do push-ups, and I don't like doing push-ups. Thanks, everybody, for watching, being patient with me today on being late to the live stream. Won't happen again. I'm going to make sure that I get something in place to make sure that I get this all done right. Part of the reason I like the way the live stream is set up is I ignore chat in the beginning so that we can get all the topics out of the way. And I think that that provides for us to be able to get more information out. Obviously, part of the fail there is that we didn't hit the go live button in YouTube. We did hit it in OBS, but apparently OBS go live button is not working right now. So there you go. I'll see you next Tuesday.